Hi, good afternoon or good morning. So what you're looking at over here at the front picture is actually, this is the waste rock from the original Granada mine. So we kept the original mine, and this is the waste rock from production that was taken anywhere from the 30s, and there was also production in the 90s. On the left and right is actually a picture of our core. About 50% of the gold that we have at this mine and for this project is a native form. So here are our cautionary statements, and here are where we're located. So we're located on what we call a Cadillac break in Quebec. We are a former producer, and anybody who's ever had a property on a Cadillac break ends up being a multi-million ounce deposit. When we originally developed this property, we developed it as a very low-grade open pit at 1 gram, and we had 2.8 million ounces. What the investors were looking at that time was actually to produce a mine similar to Osisko, but the geology of our property didn't lend itself to that. It was, our waste to ore ratio was quite high. So the ideal thing is to develop this, and this is what we've begun doing, is to develop this as a high-grade mine as was originally designed, and hopefully come in a 2.5 to 3 million ounces, open pitable at 3.5 to 5 grams, underground 4 to 5 grams. Now, the reason we chose this thing is kind of like an extension of what John is saying. We are looking at being a shipper. So there's 10 gold mills in the area, and 4 of them are shut down because there is no ore. And the other 6 are looking for ore. And a lot of these gold mines and gold mills are in search of good quality ore that is permitted. We are one of the few, if not the only, deposit that is permitted on the Cadillac break within distance of 10 mills in Quebec and 2 mills in Ontario. So I missed one here, sorry. So this is our land package. Our land package, when we first started, was the big claim, the odd-shaped object in the middle, and the pit, the open pit, is the outline, the red line there. The black and white boxes that you see half and half, those are the shafts where the old-timers mined it at 9.7 grams a ton. And also, this is where a bulk sample was taken out, about 100,000 tons, which graded 3.5 to 5 grams a ton. So the two structures combined, they're about 5.5 kilometers long, the structures. We only look at 2 kilometers of the structure, and that's where we spend most of our time drilling. So this is our program that we started. We started later than everybody else on the Cadillac break. So this is us stripping. We strip on a very large scale. So we find the structures that come right to surface, and then we drill them. So the picture on the right is after we dig it, we power wash, and these guys found some high-grade gold right on surface, which is a norm for this deposit. So significant growth potential. We feel that we should be able to develop this deposit in, like I said, a higher grade than what it is now. Right now, we have about 1.2 million ounces at 1 gram open pitable. But to sell this property to the locals, the ideal thing is to have a higher grade, so the economics are much more improved and robust. So we're looking at somewhere, like I said, about 2.5 million to 3 million ounces. Majority ounces will be underground. We feel there's probably a potential for 2 million ounces, being around 4 to 5 grams. The rest will be open pitable. As we also indicated, there's only, we explored 20% of the structure, so there's still 80% to explore, and we are the only ones that have permits to be a shipper. In other words, we are what we call shovel ready. So at a moment's notice, we can ship the rock to anybody in the area, and the intent is to be a shipper to produce about 80 to 100,000 ounces a year to the local mills. So what we have right now, like I said, we're a little late on the start. Most people were drilling for, already started over a year and a half ago. We just got our drills within the last couple of months. We're focusing right now on the near surface, what we call vein 1. Vein 1 was the structure that was mined that came back at 9 0.7 grams a ton from underground. And this is the one that came back open pittable at 3.5 to 5 grams. So right now we're just focusing on that. We found that it has about a 500-meter strike length. We're still short of the 2 kilometers within the 5 kilometers. So we're still looking at what we can find there by doing shallow drilling. We also had a bit of a grab sample. So we grabbed a sample on vein number 1. It was about 1.2 tons, metric tons, and the grade came back at 55 grams per ton. We are targeting for a revised resource with the higher grade numbers later this year. So this is our first news release that had drill data in it. And so what we did was we're drilling under the open pit that we will show you the picture of. And we came across some very high grade, which is a norm for this type of deposit. So some of the drill data came back about 5 grams over a reasonable width. And then another drill hole came back at 4 grams, of course, over a reasonable width. This is our open pit. This thing originally was 2.8 million ounces at 1 gram, a little higher. Then we took it down to a 1.2 million ounces at 1 gram, or a little higher. And we're going to take this down even further, and we'll be targeting somewhere in the 3.5 to 5 gram range. And then from the bottom of this pit, the new pit, I should say, we will then ramp down to get the higher grade ore, which we are targeting at 4 to 5 grams per ton. So here's our structure. The structure is very simple. It goes east-west in a straight line for 5.5 kilometers. We've explored only 2 kilometers of it, and we found this 1.2 million ounce resource, which we have currently. The green line is the open pit. You'll notice there's a lot of white area. So even at with this smaller open pit, we still have a very large waste to ore ratio. And what we're trying to do is remove that and actually make the pit only in the pink area. So there'll be a very low waste ore ratio, and hopefully have that 3.5 to 5 gram resource. So deposit characteristics, like I said, very simple. It's east-west. It's for 5.5 kilometers. We've explored 2 kilometers of it. Majority of the gold is actually in 3 structures that we're focusing, which is number 1, number 2, and it could be either 3 or 5. We'll have to decide which one of these veins. There's actually 9 to 22 trending east-west, and the majority of the fine gold, or the visible gold, is in these little stringers, which are about 1 centimeter wide next to the main structures. And as I indicated, we took some, had, before we acquired this property, 2 large bulk samples were taken out in early 90s. 87,000 tons were taken out 5 grams. This is vein 1 on surface. In 96, 22,000 tons were taken out at 3.5 grams. And this again is vein 1. And we in 2007 took out 32,000 tons, 1.62, and this is vein 2. So the metallurgy is fairly simple. We have about a 95% recovery by gravity and cyanidation. As indicated earlier, about 50% of our gold is in a native form. So when we come to our valuation, we are actually the cheapest stock on the Cadillac break. The reason we're so cheap, we actually started very late. We're about a year and a half behind everybody else. What we are known for is we do drill, and we do produce good drill results. And historically, this company in the past, the last cycle, we did take it to about 90 cents, 120 million market cap. And hopefully we do the same thing in this cycle. So here's our share structure. We have about 100 million shares. We're trading a little above 20 cents, but in reality, it's a 20 million market cap. And hopefully, if the market stays strong, like John has said, and of course, there's a demand for resource. Most of the people on Cadillac break are short rock. We are looking at to be a shipper, and we're looking to be taken out at a future date. And hopefully within 18 to 24 months, we produce that 2.5 million to 3 million ounce resource, which will be a small amount open pittable. The rest will be underground. We've already started the drill program as indicated. We've just completed our first 6,000 meters. We're on our second 6,000 meters. And the drill program is for 120,000 meters to be drilled in 18 to 24 months. So I thank you very much. If there are any questions, if you'd be so kind, please ask them.
Thank you, Frank. So we have quite a few questions here that from the audience that I'd like to go through. Maybe the first one here from Jackie and Jackie Chen here. How much would the locals pay for your ore?
It's we're hoping that they buy our ground or our gold in the ground anywhere from $50 to $120 an ounce. Now, right now, our gold in the ground is very cheap. It's about $5 to $6 an ounce, a little under $10 an ounce, depending on market conditions. But it's open pittable, and at 1 gram, it doesn't ship. But at 3.5 grams to 5 grams, there's a different valuation. So we're looking anywhere from $50, like I said, to about $120 an ounce. In the event we're successful to generate 2.5 million to 3 million ounces, you're looking for 100 million plus valuation in the stock or in the market cap of the company.
Okay, thank you. And another question coming from Will here. He said, "What steps are you taking to make sure you maintain good trading volumes of your stock?"
Well, what we're doing is like we're doing presentations like yours. Normally, we're always on the road. This stock, like I said, we started very late. We had a great difficulty getting the drills, and we had one drill for a while, and now we finally got our second drill just recently, and so now we're drilling around the clock, and this is what we've done last time, and we're targeting to do about 120,000 meters.
Okay, and another question from Max here. Is there any chance of getting taken over by nearby companies?
We have already three majors on our property last year before Christmas. We're hoping that one of the majors will come in. Two of them have spent, one has spent 9 months on my property, making sure the resource is there, and the other one spent 6 months. So the ideal structure is, there's IAMGOLD, which is 40 kilometers away. Agnico Eagle has three mills in the area. They're between Rouyn-Noranda and Val-d'Or, so they're less than 100 kilometers. And Eldorado has a mill in Val-d'Or, which is about 100 kilometers away. So basically three major players that can actually, they're all short rock. And, if they're interested, and of course the people at Kirkland Lake Gold have a mill right at the border. It used to be the old St. Andrews mill, which is shut down, and they're also short rock. So we're hoping one of the majors knocks on our door. What we do more than other people in this area. We actually do what we call a turnkey. We actually give you the permits, and basically you knock on our door. We really do just give you the keys. We walk away, and we get paper for paper. And we only have 20% explored, so hopefully they'll explore the other 80% and increase our resource beyond the 3 million ounces.
Okay, yeah. So this is another question coming from the Chinese side, from Austin. I'm just translating here. So how does maybe the province of Quebec compare to other mining jurisdictions in Canada?
Actually, Quebec has a very nice structure. In Quebec, if I drill with hard dollars, which we are mostly now drilling or exploring with hard dollars, I get 32 cents on a dollar. They're actually more pro-mining, pro-positive mining than the other provinces. We're also running a very high-grade silver cobalt project in Ontario. It's in the Cobalt camp, and we were very successful there. We have what I call a resource, an inferred resource of about 7 million ounces at 250 ounces per ton. So we were actually focusing more on the silver cobalt, and now we're changing our pace as well. So we're going to focus also now on the Granada mine and hopefully do what we do best, which is drill, produce results, and move the market up.
Okay, and maybe the last one here for you. What's your, I would say, he said, what's your expected cost per ounce of gold? So kind of like a prediction
Yeah,
or
we did a PFS and we updated it, and the actual cash cost all in as a shipper, depending which mill you ship to, is 650 to 800 US an ounce. So it's in
okay.
that price range. So we've done the work, and we have to get our do a PFS to get our permits. So that was the price range that you're working in. Of course, the closer the mill and the higher the grade, the lower the cost. The further the mill, which if you ship all the way to Val d'Or, it will be $800 an ounce US. So there's a very large profit margin.
Yeah, especially in the current gold price for sure.
Yeah.
Yeah.
Well, I don't think the price of gold will come back down below 1,200 ever.
Mm.
So even at $1,200 an ounce, you're making anywhere from 550 to $400 an ounce. For any major that take us over, it's quite reasonable. For example, I Am Gold have a very large mill, which is 40 kilometers away. They're the ones who spent 6 months on our property, and they have a lot of excess capacity. And we can ship to them, and they can usually get 80 to 100,000 ounces off our property annually, in the 650 range.
Good. Yes, I think that's it for the questions. And thank you for your time for answering all those questions from the live audience, Frank.
Thank you very much. Have a wonderful day.